this summer at 16 cents, this far after the Bitcoin halving, are investors still early enough to make those dynamic, life-changing gains on Kaspa? Looking beyond the business connections into the energy sector, looking beyond the KRC20 meme coin inscriptions, even the tier 1 listings on the horizon, there's an entirely new data set that we're going to throw into the mix in this video that's going to prove the answer is yes. Kaspa investors stepping up to the plate right now with dry powder are still going to see incredible life-changing gains. This new data set is the 1-year Treasury security market. This is a tool that the FOMC and PAL utilizes to control liquidity in the risk-on markets. After all the money printing that took place during the lockdowns involved in the 2021 market top, it's the focus on monetary policy that gives crypto traders a massive advantage. And the majority of investors who did well during the last cycle have a complete blind eye to how much monetary policy affects crypto charts, specifically Kaspa. Being a fair launch, the bankers have to scoop in and buy it. Every one of these arrows on Kaspa chart is a buy alert made by this channel that is directly correlated to monetary policy issues. By now, everybody who watches this channel has become hip to the FOMC meeting calendar, but that rabbit hole goes way deeper. They have auctions on when the Fed's going to be selling huge 5- and 3-year bond markets. Example, on this June 1st spike on Kaspa, 72 hours before, there was a massive 5-year bond sale, adding liquidity to the market, rocketing it to the upside. Correlating trading plans with FOMC actions in a detailed sense is the #1 reason this channel has been the best performing. This advanced element is something that we teach in detail inside VIP, alongside every trading plan, technical analysis, as well as fundamental, but also everything's connected to monetary policy in a detailed or a more zoomed out sense. Back to the 1-year bond chart. You wonder why Elon Musk thinks we live in a simulation. For any of you conspiracy theorists who think the elections are rigged, wait till you see how rigged the stock market is. This chart, in comparison with Bitcoin, proves that the FOMC is in control of risk on markets. As these numbers start to go up, this means the Fed's increasing the yield. That's the amount that they're going to pay the banker types, the money markets, the BlackRocks for buying these bonds. The higher the yield, the more attractive it is to put capital in that. As this yield starts to drop off until eventually in February, and this is a key date, February of 2020, it completely does a nosedive, meaning nobody's buying bonds anymore. Here's the factor. These are 1-year bonds. So a year after all these bonds are bought up, there's going to be a massive amount of liquidity available to enter risk on markets. And we can see this directly on Bitcoin. Remember that date, February 2020? In February of 2021, Bitcoin creates its first peak, but this rabbit hole goes even deeper. So the Fed's keeping the bond rates at 0. Bitcoin's up at 60,000. It's bouncing around. Everybody's having a party. They start to increase the yield they're offering again. And we'll take June of 2022 for an example, because at that date, the bond rate reaches a new all-time high. Back to the Bitcoin chart, that is directly when Bitcoin completely crashed. This was correlated with FTX, and there was some other regulation policy going on, like the White House unleashed Gary Gensler right here in March of 2022. All of this stacking up against risk on markets, putting money into the bonds. Right now in 2023 and 2024, the yield that they're offering is way up higher. And this is amazing because as they cut off the yield and bring it back down to zero. Hence, at the FOMC meetings, they're going to start cutting interest rates. This won't happen immediately, but over time, as these bonds expire over a year, there'll be a massive influx in liquidity that will start to rocket crypto's assets up. Keeping our eye on this chart, we can figure out when the top's going to be in and how long it's going to last. And it's already charting out to be a bigger and longer lasting bull run than ever before. This rabbit hole of monetary policy goes much deeper. I invite you guys to join us in VIP. We just added on a new addition to the 24-point checklist. It's 84 questions. To truly understand a project, just ask artificial intelligence these 84 questions. There's an arms race happening as we speak. This is going on beyond corporations like Nvidia, Google, Apple, Microsoft, Tesla, Facebook. It's actually governments across the world. They're all racing to create super sentient AI, a tool that will allow the first person to hold it to control the world. It's because of this we've been scrolling through every new artificial intelligence listing. From them, we've created 24-point reports on the gems. Some of them are Alex Becker picks like Destra. If that's a project you're interested in investing in, buying the 24-point report will get you up to speed on every detail, from strategic business partners to what the team used to do, to the wallet sizing, all the tools, all the links right at your fingertips. This VIP group isn't for everybody. It's for the traders who have their nose to the grindstone, who, without a doubt, eventually are going to figure out all this monetary policy issues. They're going to do all this research. This VIP offers a shortcut, saving time, hiring on help to streamline your research. Not only do we have these 24 reports and instructions on how to fill them out using AI on your own, we also have technical analysis VIP courses on how to use classic pattern statistics in combinations with the repeating trend line system. All of this incorporates into monetary policy that we've been studying in depth for the past 400 days. That's the number one reason this channel has had the highest yield. Thanks for checking out this video, guys. We'll catch you on the next one.